Hey everyone, welcome back to the channel. Today we're diving into SoFi Technologies, ticker SoFi, a stock that saw a roller coaster of a trading session following its Q2 2025 earnings report and a surprise $1.5 billion stock offering. We'll break down the market reaction, go deep on the earnings numbers, and explain what this new share issuance really means for investors. And most importantly, we'll look ahead at why there's still a compelling growth story with SoFi despite the short-term turbulence. If you find value in this kind of content, don't forget to hit that like button and subscribe for more updates. Now let's get into it. SoFi stock kicked off today's session with strength. Following its Q2 earnings release, which came out pre-market, the stock opened around $23.08, a solid gap up from the prior close, and quickly climbed to an intraday high of $25.08, marking gains of nearly 10% at one point. This kind of bullish reaction was totally justified. We'll get into the numbers in a second, but then something interesting happened. As the day progressed, profit-taking kicked in, and around midday, news broke of a $1.5 billion common stock offering. That sent the stock into a sharp reversal, with SoFi eventually dropping back toward $21 in the after-hours session. By the time the dust settled, SoFi was essentially flat on the day, having given up nearly all of its earlier gains. So what happened? And should long-term investors be worried? Let's first talk about the positives, and there are a lot of them. SoFi reported adjusted earnings per share of 8 cents, which blew past analyst expectations of 6 cents. That might not sound like a huge beat, but in the world of high-growth fintechs, profitability surprises are a big deal. Even more impressive was revenue. SoFi posted $858 million in net revenue, up 44% year-over-year, and well ahead of consensus expectations. What's driving this? It's a few things. Loan originations were incredibly strong, totaling $8.8 billion for the quarter. Personal loans surged 66%, home loans soared 92%, and even student loans were up 35% year-over-year. Fee-based revenue also hit a record, up 72% to $378 million. And perhaps most exciting for long-term investors, SoFi added 850,000 new members, bringing total membership to 11.7 million. That's a 34% increase year-over-year. That's real, organic growth, not just a one-off boost. And the company didn't just beat the quarter, it raised guidance for the full year. Management now expects $3.375 billion in revenue, up from prior forecasts, and boosted its full-year EPS outlook to 31 cents, which is ahead of Wall Street consensus. In short, this was an excellent quarter. Execution is strong, guidance is rising, and the flywheel of growth is clearly spinning. So with all that good news, why did the stock sell off? Enter the $1.5 billion equity offering, which was announced after the close of regular trading. SoFi plans to issue new shares of common stock to raise capital, and that understandably raised some eyebrows. Let's break it down. The offering is roughly 7.5% dilution based on the current share count, which sits around 950 million shares outstanding. SoFi will likely issue 70 to 75 million new shares, depending on the pricing. And here's the thing. Anytime a company issues new shares, existing shareholders' ownership gets diluted. Earnings per share may go down, unless the new capital generates returns that offset the dilution. That's the basic concern. So is it a red flag? Not necessarily. This isn't SoFi scrambling for cash. The company has access to multiple sources of funding, and it just posted a strong, profitable quarter. Instead, this move likely reflects a strategic play to fuel continued growth, possibly in lending capacity, tech investment, or even future acquisitions. And here's what's encouraging, SoFi chose to raise money when its stock price was strong. They didn't wait for a downturn. That shows smart capital management, using investor confidence as a tool to strengthen the balance sheet. If we zoom out, SoFi is building something unique. It's not just a lending platform. It's a digital financial ecosystem, one that spans banking, investing, credit, and personal finance. The member growth shows that users are buying into that model. And as they scale, operating leverage starts to kick in, meaning margins improve and profits expand. Let's not forget, SoFi holds a bank charter, which gives it a key advantage over fintech-only competitors. It can fund loans with deposits instead of relying entirely on outside financing, a big deal when rates are high. And with strong brand recognition among younger demographics, SoFi is in a great position to grow market share as financial habits shift digital. Yes, short-term price action will be choppy. Dilution will sting a bit. But if the capital raised goes toward accelerating growth, then the pie is simply getting bigger, and long-term investors stand to benefit. Let's recap. SoFi crushed earnings expectations with strong loan growth, rising revenue, and a growing user base. The company raised its full-year guidance for both revenue and earnings. A surprise $1.5 billion stock offering caused a reversal in the stock price as investors digested potential dilution. But this move is likely strategic and reflects confidence in SoFi's growth runway, not desperation. Long-term, the fundamentals are intact and arguably stronger than ever. So yes, it was a volatile day, but underneath the noise, SoFi is showing serious momentum. So what do you think? Are you buying the dip in SoFi or sitting on the sidelines? Let me know in the comments. I always love hearing your take. Personally, I see SoFi as a long-term compounder. The execution is solid, the platform is sticky, and if management puts this new capital to good use, we could be looking at a company that's still in the early innings of its story. If you found this update helpful, be sure to like, subscribe, and share it with someone who's watching this stock. And if you'd like a deeper dive into SoFi's financials or competitive positioning, let me know and I'll make a follow-up video. Until next time, stay curious, stay optimistic, and keep investing in your future.